This is Nightly Business Report with Bill Griffith and Sue Herrera.
Safety questions, concerns mount over Boeing's newest plane following a deadly crash over the weekend, and the FAA weighs in.
Budget battle. The White House tells Congress how it wants to spend your tax dollars.
Energy boom, why the U.S. is now a force to be reckoned with in the global oil market. And it's reshaping the industry as we know it. Those stories and more tonight on Nightly Business Report for Monday, March 11th.
And we do bid you a good evening, everybody, and welcome. We saw an epic tug of war on Wall Street today. The Dow was down 242 points at its low when its highest priced and therefore most influential component, Boeing, fell as much as 12% in response to that Ethiopian flight crash yesterday. It involved the aerospace company's newest model, and we'll have more on that in just a moment. But the Dow did stage a strong reversal because of a gain in Apple shares after that company received a buy recommendation from an influential analyst. Other stocks then followed suit, and the Dow's big decline became a big gain. And at the close, the industrial average was up 200 points. It closed at 25,650. The NASDAQ was up 149, its best day in 6 weeks. And the S&P 500 added 40.
And now to Boeing, which fell more than 5% in trading today, though it was down as much as 12% during the trading session. That is because of the plane crash over the weekend that involved Boeing's 737 MAX 8. The FAA says the plane is still airworthy. Investigators are on the scene looking to see if there's a problem with the aircraft that many consider to be an important part of Boeing's future. Phil LeBeau has more.
One day after the crash of an Ethiopian Airlines 737 MAX 8, investigators have recovered the black boxes that could explain what went wrong. Shortly after takeoff, the pilot said there was a problem and struggled to control the plane before it crashed. Eerily similar to what happened before a Lion Air 737 MAX 8 crashed in the Java Sea last October.
It certainly is too early to rush a judgment. The accidents may be similar, these two different accidents in two different countries, but until we get a little more facts, we can't compare them.
Boeing says the MAX 8 is safe, despite concerns the plane's design could create certain situations where faulty data might force the MAX 8's automatic anti-stall technology to kick in. When that happens, it pushes the plane's nose lower. Some pilots have complained they didn't know about that technology or how to deal with it. Late last year, the FAA ordered Boeing to tell airlines more explicitly exactly how crews should respond in those situations. Both the FAA and the NTSB are probing the crash in Ethiopia. It may be too early to know what caused the accident, but China, Indonesia, as well as some airlines are worried enough to ground their 737 MAX 8s. Raising concerns about Boeing's most popular plane. With monthly production steadily rising, the 737 generates billions in cash for Boeing.
Given the magnitude of how big the 737 is for growth driver, that's what's driving the fear factor.
Here in the United States, American and Southwest are the two airlines that fly the Boeing 737 MAX 8. And while there were plenty of people on social media today who were saying, I'm not sure I want to get on this plane, both Southwest and American say the plane is solid and they stand by it and will continue flying it. Guys, back to you.
Phil, tell us more about the FAA's directive late this afternoon and the agency's decision not to ground the plane.
Well, essentially what they're saying, and I'm looking at it right here, they just issued it. It basically is them, the FAA, saying, look, we haven't seen enough here that tells us this plane is unsafe and it should be grounded immediately. In addition, as part of this airworthiness continuation from the FAA, they are saying that Boeing will be making some design changes to the 737 MAX 8 by no later than next month. So it's partly them saying to the world, it's safe. It's also partly the FAA saying Boeing understands some of the changes that need to be made to this plane, and they will be making those changes at least by next month.
By the way, we should point out about 350 of these MAX 8s are in service around the world. There are about 54 airlines. So, you know, there are other airlines that are going to have to make a decision, not just American and Southwest on this, right?
Correct. Correct. And as the FAA goes, they pretty much set the table in terms of how the rest of the world views whether or not to use a particular aircraft.
Phil LeBeau in Chicago, as always. Thanks, Phil.
You bet.
The bull market turned 10 over the weekend, and inevitably, investors want to know if it can continue. Well, the chairman of the Federal Reserve was asked that very question during an interview last night on 60 Minutes.
I would just say there's no reason why it can't continue.
For years?
Eventually, expansions come to an end. The business cycle has not been repealed, but I would say there's no reason why this economy cannot continue to expand.
But just last week, the man who is credited with calling the 2008 financial crisis said he feels long-term investors should get used to lower real returns.
Over a long horizon, like 20 years, U.S. market will be delivering 2 or 3% real. And for the last 100 years, we're used to it delivering perhaps 6% real. So this is a fairly painful, it's not the end of the world, but it's going to break a lot of hearts when we're right.
So what should investors make of those comments from two very influential figures? Joining us from Boston tonight, Art Hogan, who's Chief Market Strategist at National Securities. Welcome back, Arthur.
Thanks for having me.
And just last week, there were those who were saying we should get used to lower interest rates down the road with the Fed on hold, at least for now. So lower rates, lower returns. Do you agree?
Well, I think you have to put things in context and talk about what time frame both of these speakers were talking about. So Jay Powell was asked a question about the bulk continuing, and he said, yeah, and he might have said for a couple of years. I think he's talking very short term. Jeremy Grantham has been talking about this for a long time, and he's certainly talking about what our real returns are going to be like for the next 10 or 20 years. I think looking at this right now and saying the last 10 years we had 17.5% average annual returns, we're not going to see that for the next 10 years. We were coming out of a big hole where the S&P 500 was off some 55% at its low point. So yes, obviously we bounced back significantly. But I think if you look at the natural history of the market, for us to expect kind of normal returns over the next 10 years, I think probably makes sense. And normal returns would be anywhere between 6 and 8%, which is probably going to outpace fixed income. So in my mind, I think the time horizon has to be set such that we look at this in a normal fashion. And what does it mean to you and I, the investor? Would we make any changes to our investment plans because Jeremy Grantham thinks total returns over the next 20 years might be less than average?
Right. But you've always advocated, and I assume you still do, a balanced portfolio. Take a look at it every once in a while, rebalance if you have to, when we get those inflection points.
So that's the most important thing, to have a plan, right? And then to stick to that plan and try to tune out some of the noise. And part of sticking to that plan means knowing exactly what your risk tolerance is, setting that up so that you feel comfortable at night, you're able to sleep with the portfolio that you have, and then setting a calendar item such that you know that you have to look at this. Has the movement in the market had me overweight in the market and not enough exposure to fixed income? So that rebalancing on a regular basis certainly helps that. But you have to have a plan, you want to stick to it.
Indeed. Art Hogan, words of wisdom as always. National Securities. Good to see you again. Thanks, Art.
Good to see you. Thanks.
Across the Atlantic, a critical Brexit vote will take place tomorrow. The country is scheduled to leave the European Union on March 29th. But as of now, there is no deal in place outlining exactly how that will happen. And as Willem Marx explains, the political fighting has become a parliamentary game of Brexit chutes and ladders.
Several months ago, British Prime Minister Theresa May negotiated an agreement for the UK to leave the European Union. In January, a majority in the British Parliament voted against it. Since then, May and members of her cabinet have shuttled between Brussels and Westminster, trying to make tweaks to the deal so the House of Commons can finally approve it. March 29th is the current deadline for Brexit. That's less than 3 weeks away. So how can May get from here to there? Well, by March 12th, she must offer Parliament another up or down vote on her divorce agreement with or without revisions. If lawmakers approve it, she could still try to make Brexit happen by March 29th. But it's possible she might need more time to rush through all the necessary legislation, in which case she could ask for a brief extension to the deadline with an uncertain end date. If her deal loses that first vote, May's promised a second separate vote on March 13th. That could allow Parliament to decide whether it wants the UK to exit the EU with a deal, just not May's deal, or with no deal. Now, if no deal wins a majority, then without any comprehensive arrangements over trade, customs, or citizens' rights, Britain would still leave the EU on March 29th. But if enough lawmakers dislike that option, May is guaranteed a third vote on March 14th to consider a possible extension. If that idea wins parliamentary support, the UK would ask Europe for more time to consider its options. Theresa May wants to limit any extension to 3 months, but it's not clear whether the EU will suggest more time than that, demand less time than that, or offer no time at all. If that third vote fails on March 14th, the UK could be back to square one. For Nightly Business Report, I'm Willem Marks in London.
Time to take a look now at some of today's upgrades and downgrades. We begin with Apple. We mentioned this earlier. They were upgraded to buy from neutral at Bank of America Merrill Lynch. That analyst cites stability in its supply chain and a likely boost from the rollout of the 5G networks later this year. Price target now $210. That stock rose about 3.5% to boost the Dow today to 178.90. Meanwhile, Facebook was upgraded to buy from neutral at Nomura. The analyst cited its new focus on messaging and a faster than expected transition to Facebook Stories. Price target now $215, and that stock rose about 1.5% to 172.07.
Oracle was downgraded to reduce from buy at Nomura. The analyst says Oracle is under-investing in research and development and that Oracle's pace of buybacks can't last forever. The price target is $42. The stock fell a fraction to $52.66. FireEye was upgraded to overweight from neutral at J.P. Morgan. The analyst cites the potential for billings to accelerate through the year. The price target is $20. The stock rose more than 5% to $16.97.
And still ahead, the budget battle taking shape in Washington. Retail sales rebounded in January, only a month after their biggest decline in 10 years. Commerce Department reported this morning that sales were up 0.2%. That was better than expected, thanks to strong demand for building materials. But December's number was actually revised even lower to a decline of 1.6% compared to the originally reported decline of 1.2%.
Business inventories rose in December as sales dropped. Economists say that could potentially lead to a pileup of unsold goods. Inventories are closely watched because they are a key component of gross domestic product. This release of this report was delayed because of the partial government shutdown.
The White House sent its $4.7 trillion budget proposal to Capitol Hill today, laying out its priorities for the next fiscal year. And as Yolande Mui reports now, it is expected to spark a lot of debate.
President Trump's budget calls for a record $2.7 trillion in cuts to federal spending over the next decade. Most of that amount, $1.9 trillion, comes from changes to mandatory spending programs. Among them, new restrictions on Medicare's prescription drug benefits and work requirements to qualify for Medicaid and food stamps. But there are also new costs, like making all of the current tax cuts permanent, and a big increase in defense spending to $750 billion for next fiscal year alone.
This budget is yet another fiscally responsible and common sense spending plan from President Trump. The president has continually called for fiscal restraint and will persist in his efforts to end the wasteful spending.
The president's budget also relies on optimistic economic forecasts, 3% growth over the next 10 years. That is way above the projections of the nonpartisan Congressional Budget Office, which expects growth to come in under 2%. Even so, the White House anticipates the deficit will still hit $1 trillion this year, and the budget won't balance until 2034. On Capitol Hill, Democrats say Trump's budget is dead on arrival, especially since it includes $8.6 billion for the border wall.
I think this is actually a recipe for the decline of America. It's very disappointing. And unfortunately, it's the same type of budget that Republicans have been proposing for several years now, one that decimates important investments in human resources in the country and basically says the federal government has no role in making sure that we have an opportunity-based society.
Congress ultimately has the power of the purse, but the president has the power of the veto. And these are just the opening salvos in what promises to be a bitter battle over the budget. For Nightly Business Report, I'm Milan Mui in Washington.
NVIDIA goes shopping for more chips, and that's where we begin tonight's market focus. NVIDIA is buying fellow chipmaker Mellanox for just about $7 billion in what is NVIDIA's largest acquisition ever. The combination of the two chipmakers is designed to reduce NVIDIA's dependence on the video game industry and increase its presence in the data center market. Shares of both companies were up 7%, NVIDIA closing at $161.14 and Mellanox at $117.89. Barrick Gold is dropping its nearly $18 billion hostile bid to take over Newmont Mining, which would have created the world's largest gold producer. Instead, the two have entered into a joint venture for their operations in Nevada. The Wall Street Journal says Newmont gets about a third of its revenue from Nevada, while Barrick generates more than 40% from its operations in that state. Barrick shares rose 2% to $13.18, but Newmont fell a fraction to $33.45. Deutsche Bank has reportedly agreed to hold talks with rival Commerzbank to explore strategic options, including a possible merger between Germany's two largest banks. Multiple reports suggest the talks were agreed to after the German government increased pressure to address Deutsche's sagging performance. Deutsche Bank rose 5.5% to $9.12.
Helen of Troy is reportedly putting its beauty unit up for sale. The Wall Street Journal says the division, which makes products like Pert shampoo and Revlon hair dryers, is expected to bring in about $300 million if it's sold. Shares rose more than 1% today to $111.97. Tesla is now planning to raise prices on its high-end vehicles by about 3%, but the electric automaker will keep the most basic version of its Model 3 at $35,000. Company also said it's going to keep more of its retail sales open, locations open than it had originally planned. Shares were up more than 2% today to $290.92. And Transocean has signed 2 new contracts for offshore oil rigs with Brazil's Petrobras. The 2 deals combined are worth nearly $250 million, and that is more than it was expected. That's why the stock was up about 6.5% today to $8.63.
America's growing influence in the energy market was on display at one of the world's biggest oil and energy conferences. Brian Sullivan traveled to Texas, where the talk at CERAWeek focused on the shale oil boom, geopolitics, and the future of OPEC.
More than 5,000 people from over 70 countries drilling into Houston, attended by the CEOs of nearly every major oil and gas company, heads of state, and 2 members of the Trump cabinet, Secretary of State Michael Pompeo and Secretary of Energy Rick Perry. CNBC spoke with Secretary Perry, and we asked him how energy and national security come together right now.
So the United States, with this shale boom, with this revolution that's occurred in this country, and I might add, with the development and the growth that we're seeing in our renewables and the nuclear side of things, all of this basically says to the United States, you do not have to worry about being held hostage by any country in the world with any type of fuel. You can do it yourself right here.
American energy independence has been talked about by every president dating back to Richard Nixon. And while it is unlikely that all imports of crude oil will be replaced by U.S. production, Perry, a Texas native, believes that America's energy boom will continue to reshape global markets, particularly with liquefied natural gas, a huge and growing market in a commodity that China desperately needs. In fact, gas is so vital to Asia that it's playing a big role in the trade talks. We asked Secretary Perry how important.
It's part of the mix. May not be the driver, but it's always hanging out there as part of the matrix, if you will. So very important, and America now has the ability to use that in a very positive way when it comes to trade negotiation.
In fact, as we produce more oil and gas, we will need to sell more of both around the world. The International Energy Agency says that not only will crude exports keep growing, but we will soon pass Russia and even close in on Saudi Arabia on shipping oil around the world. Energy expert Dan Yergin, the founder of this conference, says the United States is now the force to be reckoned with in oil and in energy.
The U.S. has a big impact. You see the kind of growth. To just think at the end of this year, the U.S. will be producing around 13 million barrels a day, 2.5 times what it produced in 2008. What a big change. And I think the other producers around the world are really having to react to the amount of U.S. oil coming to the market.
Even just 10 years ago, the women and men here would have barely talked about sending our oil and gas outside the country. All the conversation would have been about imports, not exports. But America's shale oil boom and energy renaissance has changed all that, just as it is changing energy policy, both here and abroad, and made Texas, and in many ways this conference, the center of the energy world. For Nightly Business Report, I'm Brian Sullivan, Houston, Texas.
Coming up, building a brand. Wait till you see what some companies are doing to get noticed.
The South by Southwest Conference actually started 32 years ago as a music festival. But today it's much more than that. Among other things, it has become a place where companies go to draw attention to their brands. And this year, the marketing is very high-tech and extreme. Julia Borston takes us to Austin, Texas tonight.
South by Southwest draws innovative tech companies from around the world. The demos, conversations, and technologies here set the stage for trends to watch. Robots, electric scooters crowding the streets, virtual reality to enter new immersive worlds, and augmented reality to make trying on earrings and glasses virtually possible. And what would a tech conference be without drones? One company is here showcasing its personal drone aircraft set to take flight later this year.
This is not the future of personal aviation. It's the present of personal aviation. We're starting now.
This conference in Austin is also a key battleground for media companies to reach the consumers who are here and encourage them to spread the word to their social media following. The most dramatic experiential marketing in Austin, HBO's creation of the world of Westeros, drawing some 3,000 visitors and hoping to reach millions of fans.
HBO investing millions of dollars to bring fans into this world of Game of Thrones, shipping in not just the Iron Throne, but also costumes from Ireland to outfit the 80 actors who have a script over 100 pages long. The goal, to make the experience as authentic and immersive as possible.
HBO spent 6 months working on this experience, including bringing in a dialect coach and creating original score for a choir. With this experience kicking off a nationwide partnership with the Red Cross.
The Red Cross saw over 40% uplift in new donors, and that's really the goal because it becomes a lifetime value proposition for these people.
Amazon promoting its upcoming show, Good Omens, the story of a demon and an angel with this garden of earthly delights. Vice creating a roller rink to promote its shows, and Netflix creating a 1930s-style speakeasy to promote its upcoming film, The Highwaymen. But it's not just Hollywood here. High-profile names from Washington making the trip to Austin to talk to this crowd about the future of regulation.
We want to keep that marketplace competitive.
Senator Elizabeth Warren doubled down on her call to break up big tech companies, while Senator Amy Klobuchar advocated for taxing big tech companies' use of data. For Nightly Business Report, I'm Julia Borston in Austin, Texas.
Before we go, here's a look at the final numbers on Wall Street. The Dow gained 200 points. The Nasdaq was up 149, its best day in 6 weeks, and the S&P 500 added 40.
So are you planning to take a drone down the West Side Highway
No,
now
not
that
right
the future is here?
I think it could be. I really do. I won't be in it, but that's okay.
Me either.
That does it for us tonight. I'm Sue Herrera. Thanks for joining us. We'd like to remind you this is the time of year your public television station seeks your support.
I'm Bill Griffith. Thank you very much for that support. Have a great evening. We'll see you tomorrow.